Bhavya only, she's coming. All right, great. So starting off the class here, we are looking into the question of chapter 9. Okay, so let's look into the questions of chapter 9 here and let's get a good understanding about this. Okay, so we will start from question number 104. Okay, we're starting from question 104 and let's get a good understanding about the question related to chapter 9. The last class we have finished the theory and now we are looking to finish the practical questions of it. Okay, starting off now here, and we're going to relate it to the theory that we have studied here. So the first question is just telling us that there's a company called F company. They sell motor vehicles. The government is going to improve public transport in country V. There's a country called country V, and that government is planning to improve the public transport. This will make the transport cheaper, faster, and more comfortable. So people might want to stop buying cars and use public transport instead. Okay. So this falls under what? This falls under the barrier to entry, the power of supply, threat of substitutes. Okay. So basically what is happening is the government wants to improve the public transport. So for the car industry, this would be a threat from substitutes. Okay. From the car industry, this would be a threat from substitutes. Okay. So if I talk from the car industry, this will be a threat of substitutes. So this will come over here, threat from substitutes. So what are the threats you have from your substitutes? Quarter 5. New entrants, rivalry competitors, okay, buyers, suppliers, set of substitutes देखो ठीक है, this will be set of substitutes. Question 104 is coming from here. Okay, so what has happened over here is there is a company called as F company, and the government in that country, the government is going to improve public transport in country V. So this will make public transport cheaper, faster, and more comfortable. So more people might stop buying cars and use public transport instead. So under Porter 5 forces, which force is this? This is a threat of substitutes. Okay, under Porter 5 forces, this is a threat of substitutes. Okay, because what the government is doing, the government is basically making public transport better. And if the public transport is making better, then what is this? For F company who is basically selling motor vehicles, people will not buy their own motor vehicles. What they will do instead is they will start using the public transport. So this is a threat of substitutes. Okay, so this is our question number 104. Now looking into 105. So Xco offers accountancy training courses. So Xco basically they run an accountancy training course. The market is growing very fast and X courses are very different from the rivals. So to start a new training company, you need an accreditation also, and that takes several years, right? So you need that confidence from an external party and accreditation is needed, and that takes several years. So the question is, what can we say about X competitive environment, right? What can we say about the X competitive environment? How is the competitive environment like? Okay, so if we look into the competitive environment here, okay, so what is the threat of new entrants here? So the question is based on this. Question 105 यहाँ से आ रहा है, threat of new entrants. So they say X is basically selling the training accountancy training courses, right? And the market is growing very fast. And X courses are very different from the rivals. Okay, any new company wishing to teach accounting courses must obtain accreditation, and it takes a process that takes several years. So based on the above information, which of the following statements can be made about excess competitive environment? Okay, which of the following statements can be made? Which of the following statements can be made about excess competitive environment? Okay, which of the following statements can be made about excess competitive environment? So which of the following statements can be made about excess competitive environment? That is the question here. And the answer to this is the threat of new entrant is likely to be low. This threat is low. Okay, why is this threat low? Because to get accreditation, it takes several years. So you easily can't get into the market. That today you decide, tomorrow you start. Doesn't happen like that. Okay, today you decide, tomorrow you start. Doesn't happen. Okay, today you start. To say today you decide, tomorrow you start. It doesn't happen like that. Okay, a process that can take several years. This process takes several years. Okay, any new company wishing to teach accountancy courses must obtain accreditation by the various accountancy organization. A process that takes several years, and because it takes several years, it is not easy. The threat of new entrants is low. It's not very easy to start here. Okay, the threat of new entrants is low. It's not very easy to start here. Now let's look into question 106. So the question asks high fixed cost means that you have to sell a lot just to break even. If you have high fixed cost, that means you have to sell a lot just to break even. You need to sell a lot. So in which of the Porter five forces is this not a big issue? In which of the Porter five forces is this not a big issue? Okay. So high fixed cost means you have to sell a lot just to break even. Just to break even, you have to sell a lot, right? You have to sell a lot just to break even. In which of Porter five forces, this is not a big issue. Okay. So again, it's a Porter five question. Okay. So high fixed cost means you have to sell a lot just to break even. And in which of Porter five forces is this a big issue? Okay. So you have to sell a lot. So here they say higher fixed costs would not be expected to be an issue within one of Porter's five forces. So which is would not be an expected issue in which of the following five forces. So if you look here, so A definitely competitive rivalry. See, if high fixed costs are there, firms will slash the prices to sell volume. Rivalry goes up. So this is an issue. In case of competitive rivalry, what happens is if you have high fixed cost, the firms will slash the prices. They will make the prices lower to sell volume and the rivalry will go up. So it is definitely an issue. Okay, the rivalry will go up. It is definitely an issue. Okay. So the rivalry will go up. It's definitely an issue. Rivalry will go up. It's definitely an issue. Okay. Barriers to entry. If there is high fixed cost, it's hard to start. So it's definitely a barrier. There also it is an issue. Okay, barriers to entry, if you see high fixed cost means it's hard to start up. So it is definitely an issue. Next we look into is power of customers. So if you need volume, customers can bargain harder, right? If you need volume, customers can bargain harder. So it is definitely an issue. So the threat of substitute, it's not an issue here. This is about other products replacing yours. High fixed cost doesn't directly affect a substitute, whether a substitute exists or not. The fixed cost does not affect the threat of substitutes. The fixed cost does not affect the threat of substitute. Fixed cost does not affect the threat of substitutes. Okay. The fixed cost does not affect the threat of substitutes. So when we talk about threat of substitutes, fixed cost doesn't affect this. Okay. Fixed cost will not affect the threat of substitutes. Okay. The fixed cost will not affect the threat of substitutes. Okay. The fixed costs do not affect threat of substitutes. I'll make a point here also so that whenever you revise, it feels easy. Fixed cost does not affect threat of substitutes. Okay. Fixed cost does not affect threat of substitutes. Okay. Fixed cost does not affect threat of substitutes. What does fixed cost does not affect? Fixed cost does not affect threat of substitutes. Fixed cost does not affect threat of substitutes. Okay. Fixed cost does not affect threat of substitutes. Fixed cost does not affect threat of substitutes. Okay. So it affects everything else. Fixed cost, it does not affect threat of substitutes. Okay. That is our question 106. Now coming to 107. Okay. Now coming to 107. Okay. Now coming to 107. Okay. Now coming to 107. So when we look into 107 here, when considering Porter's value chain analysis, which of the following describes an outbound logistics? Which of the following describes an outbound logistics? So we had studied, see, outbound logistics, inbound logistics. So if you see outbound logistics, so the question is come from here. Okay, the question is come from here. Okay, so we have question 105. Okay, so we have question 105. And okay, so let's look into question 105. Outbound logistics, question 105. Okay. Sorry, question 107. Outbound logistics, it's coming from here. Okay, so they're selling. Which of the following, Valuation, which of the following describes outbound logistics? See, outbound logistics, you know that we are delivering the goods to the consumers. Okay. So distributing the products to the consumers. So, okay. Outbound logistics is nothing but delivery of finished goods to the customers effectively. So outbound means that you're delivering the products to the customers. What is outbound? Delivering the products to the customers. What is outbound? You're delivering the products to the customers. What is outbound? You're delivering the products to the customers. Okay. Outbound, you're delivering products to the customers. Okay. Outbound, you're delivering products to the customers. That is your outbound device. Okay. You're delivering products to the customers. Okay. You're delivering okay. Delivering products to the customers. Okay. Delivering products to the customers. Okay. Delivering products to the customers. Okay. What you're doing in outbound, yeah, you're delivering products to the customer. Okay. And outbound, what you're doing, you're delivering products to the customers. And outbound, what you're doing, you're delivering products to the customers. That's what you're doing in outbound. Okay, you're delivering products to the customers. So outbound is done. 108 now. Let's look into 108. Okay. Hmm. Okay. So you're delivering outbound. Okay. So outbound, 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 outbound. Okay. So outbound is done. Going on to the next question here. Okay. Looking into the next question here. Outbound logistics. Looking into the next question here. Okay. Outbound is done. Okay. Looking into 108. The next question here. We are asking, AH company. Okay, they make cables. What does AH do? They make cables. Okay, AH company, they make the cables. Which activity is inbound logistics? Okay, AH company, they buy cables. Which of it is inbound logistics? Okay, AH company that make cables. Which activity is inbound logistics? Okay, AH company, they make cables. Which of it is inbound logistics? Now, okay, from a number of manufacturers. They make cables from a number of manufacturers and they cut it into shorter lengths and they sell it to retailers. So they buy in long, they sell it, they cut it in short and they sell it to retailers. One of its department is solely responsible for cutting of the cable. Okay, which party is responsible for cutting of the cable? Okay, so which is responsible for cutting of the cable? Okay, who cut off? So cut off the cable is your operations. Okay, cutting of the cable is your operations. Okay, cutting of cable is your operations, right? So what they do is they buy in large length, they buy small pieces, they cut it. Large length, they buy small pieces, they cut it. They buy it in large length and they cut it in small pieces. Okay, they buy it in large length and they cut it small pieces, small pieces, small pieces, small pieces. Right, they cut it in completely small pieces. Right, they buy it in large and they cut it in two small pieces. That is the operations. Okay, that is the operations. Right, that is what they actually do to make money. So that is their operations. Okay, next now we'll look into a company who sells its products at a price below that of the similar rival products is likely to have adopted a differentiation strategy. So see, price has nothing to do with differentiation strategy. Okay, differentiation is about making a product unique. Okay, differentiation strategy is about making a product unique. A differentiation strategy is about making a product unique. Okay, what is differentiation strategy? Okay, differentiation strategy is about making a product unique. It has nothing to do with price. Okay, differentiation strategy has nothing to do with price. Differentiation strategy has nothing to do with price. Okay, differentiation strategy has nothing to do with price. When I talk about differentiation strategy, it has nothing to do with price. Okay, differentiation strategy has nothing to do with price. Okay, when I talk about differentiation strategy, it has nothing to do with price. Okay, differentiation strategy has nothing to do with price. Okay, differentiation strategy has nothing to do with price. Okay, so when I talk about differentiation strategy, it has nothing to do with price. So that's why 109 is false. Differentiation is all about making such a unique product and giving such a customer unique experience that the customer genuinely, want to be your customer only. Next, Hedge provides a range of products and services that are tailored significantly to pregnant women. So this is a very niche category, right? Here, this is a focus. You sell it for a very niche category, right? You have a very niche category that you focus on. Okay, the strategies comes under focus, right? You're selling to pregnant women. It's a very niche strategy. It's a very specific strategy. Okay, it's for a very specific group of customers. Okay, it's a very specific strategy. It's a very niche strategy. It's for a specific group of people. Okay, it's for a very specific group of people. It's a very niche strategy, very specific strategy for a small group of people. Okay, so that is about this. Next, Porter value chain. So when we talk about the Porter value chain, what about them? The Porter value chain determines whether and how a firm's activities contribute to which of the following. Okay, so it looked into which of the following does the firm contribute into which of the following. Okay, the firm contributes to which of the following. That's what we're looking over here. The firm contributes to which of the following. Okay, the Porter's value chain breaks a firm's activity to see how it creates value. So I was saying, what does the firm value chain help to determine? Right here, they help in building competitive advantage. Right, they help in building competitive advantage. So we had done this over here. Porter's value chain. Right, so help to determine competitive advantage. Right, customer see competitive advantage. So this is where the question is coming from. Question 111. Okay, so Porter value chain. Competitive advantage comes from improving the business activity. How can you improve the business activities? How can you improve the business activities? right? How can you improve the business activities? Competitive advantage comes from improving the business activities. So how can we improve the business activities? Okay, how can we improve the business activities? So that you can get a competitive advantage. How can you improve the business activities to get a competitive advantage? How can you improve the business activities to get a competitive advantage? How can you improve the business activities to get a competitive advantage? Okay, how can you improve the business activities to get a competitive advantage? Okay, how can you improve the business activities to get a competitive advantage? How can you improve the business activities to get a competitive advantage? That is about this. Okay, how can you improve the how can you improve the business activities to get a competitive advantage? Okay, how can you improve the business activities to get a competitive advantage? Right, competitive advantage comes from improving the business activities. So how can you do that? That is about this. Okay, next we look into question 112. So when we look at the question 112, what does it has to say over here? And from which topic is it coming from? VCD is a large trading company and Steve is the administration manager. Okay. The name of the company is VCD Co. Steve is the administration manager. Then there's Sheila. Sheila is the compliance, customer service and quality manager. Then there is Sunny. Sunny is the buying supplier plus inventory plus the equipment for the factory. Sam is the IT manager. So according to the Porter value chain, who is doing a primary activity and not a support activity? Here, if you look into is who is doing a primary activity. So primary activity, the logic over here, you see primary versus support activities. So I'll bring it right here. Okay, primary activities versus support activities. So directly make deliver the product inbound operation outbound. Okay, sales service. Support activities help primary run firm infrastructure, HRM and tech development and procurement. Okay, so primary and secondary activities. So I will just bring it right here for you guys. Primary and secondary activities. Support to primary activities. Primary activities. Perfect. So now they're asking who is doing a primary activity. Okay. So see, Steve is doing administration. Okay. So where is the question? Steve. If you see Steve is doing administration. Administration is a secondary activity. Okay. Sheila is directly connecting with the customers. That is the primary activity. Sunny is buying supplier plus inventory procurement. So he's doing a support activity. Sam is giving IT support. That is also support activity. So only Sheila is doing customer service, right? So after sales service, customer service, you see here, service. Sheila is doing service, and that is a primary activity. Sheila doing service is a primary activity. Okay, administration, one person is doing admin. Okay, admin is the secondary activity. The other person is doing supplier and inventory. That is also secondary activity. Procurement, and last is tech support. That is also secondary activity. Right? Everything is else is secondary activity. After sales service is a primary activity. Okay, after sales service is a primary activity. If you look here, after sales service is a primary activity. After sales service is a primary activity. Next, we look into question 113 here. Okay, this is about SWOT. So let's get an idea about SWOT here. Okay, so looking into SWOT here. Okay, so looking into SWOT here. Okay, so AZCO is doing a SWOT analysis. It has a large cash balance. That AZCO is doing a SWOT analysis. It has a large cash balance. Is this a strength, weakness, opportunity, or threat? Okay, if you look here, AZCO is performing a SWOT. It has a very good cash balance. So this is obviously a strength. Having cash balance is a strength. Why not? If you have a good cash balance, it is a strength. Okay, if you have cash balance, that is a strength. Why is it not a strength? Okay, having a cash balance is a strength. Right? Strengths are internal capabilities. So if you have a good cash balance, that is a strength. Why not? If you have a good cash balance, that is a strength. Okay. If you have good cash balance, that is a strength. Next question they are asking is a value network looks like linkage between the supply chains of different organizations such as suppliers and their customers, right? Value chain basically looks inside one company, all the activities that one firm does. Value chain looks inside one company and all the activities that one firm does. Now, okay, looks inside one company. What does value chain do? Value chain looks inside one company and all the activity that a firm does. That's what value chain do. Value network is basically looks outside. It links the value chains of different companies. So value chain versus value network. If you look at value network, right, it's beyond the single firm. Here you look into, you compare it with again various organization across the entire network improves efficiency. Collaboration across various improves competitive advantage. Right. So value network. So that's the difference between value chain and value network. The value chain is one company. Value network is looks outside. It links the value chains of different companies together. Right. It links the value chain of different companies together. Okay. It links the value chain of different companies together. Right. What it does, it links the value chain of multiple companies together. Okay. It links the value chain of various companies together. It links the value chain of various companies together. What it does, it links the value chain of various companies together. Okay, it links the value chain of various companies together. That is what this does. Links the value chain of various companies together. Okay, it links the value chain of various companies together. Okay, links the value chain of various companies together. This is done, finished. Okay, so that is our question. 114 links the value chain of various companies together. Okay, so it's important, guys, that we revise all the questions till 114 today. Okay, revise all questions till 114. Okay, that is the first thing. All the questions till 114. Okay, and then we will revise chapter 10. Okay, which I'll be starting now. Second thing, revise chapter 9 and 10. That is the homework with regards to what we have done right now. What I have done is questions. Questions of chapter 9 are done. 9 is done. Questions of chapter 9 is done. This is what we finished. Okay, and we'll revise solve the questions till 114 and revise chapter 9 and 10. Okay. Okay, so good to see, guys, that Ranveer and Bhavya are regularly updating this. So please make sure continue to do that. Okay, done. Let's start chapter